Hi everyone, I hope you're all doing well, and today I'm going to be talking about the three stocks that I have bought this week and kind of just making my first investments in this company because I feel like all three of them have quite a bit decent upside on them, and actually all three of them have come from you guys, the viewers, and I'm trying to make this like the biggest UK stock market community like out there on YouTube, and a lot of you guys, like I've seen you down below in the comment section talking to each other, like thinking what your thoughts are about like certain stocks. And these three companies that have actually come from you guys commenting down below and saying, you know, Jacob, go check these stocks out, and I have, and I think these are three little good opportunities where there's potential to make maybe 100% plus on a few of these. One of them's been on a little bit of a decent run, two of them are a little bit more beaten down, but as always, smash that like button guys, subscribe, and we'll get stuck into the video. So on my Patreon's page and my Discord page, I did actually post that I was going to be buying into these on Sunday night, so if you want to get a little bit earlier notice, I normally do post what I'm doing exactly on that patrons page. The link is in the description below. But the first one is Artel Africa, and the ticker symbol for this one is AAF. And basically it provides telecommunications, and it also provides money services in Africa. And I've had a few guys actually say go check this company out, and you know what, I should have done, because I saw what it looked like and I was like, oh, it's a good company, I'll read the earnings report at some point. And the stock's jumped up slightly since then, so it's my own fault for not actually checking this company earlier. But I still think there's a little bit of upside in this company for sure. Now I'm going to say there is two risky points with this, and that is that obviously politically a little bit more unstable in Africa, and also, you know, it's hard to manage the economy over there. Like I'm invested in like Chinese companies, so I manage the economy over there, US, UK, so managing three economies is pretty difficult, but keeping an eye on the Africa one, how everything's going in Africa, is obviously a very difficult one. So there's that kind of risk that you're investing into an economy that you're pretty, it's a lot more vulnerable to what our or other economies are for sure. And also it's a lot harder to track the news, so it does come with that risk that you're investing into a little bit more of a risky economy. So that's one thing that you've got to be careful of when you're buying into this one. But over the last few days, it has had a bit of a jump in the stock price. But even so, I think, there's potential for this stock to go up a little bit more. It had a little bit of trouble since its IPO, and there's been a lot of worries about how well the company's going to be doing. But everything starts to be leveling out a little bit more for this company now. So it's all looking pretty good. Now, when you think about this company, where's this going to come from? Obviously, telecommunications in Africa is not as developed as what it is in like the Western civilization. When you look at Africa, like a lot of the countries there, they haven't even got like full coverage of like 4G yet, and we're talking about 5G at some point within probably the next year. In fact, it's pretty much nearly already in place right now, but not mass coverage of 5G, but it's getting there. When we look at Africa, they haven't even developed complete 4G yet in a lot of African countries. So there's all that growth from that 4G where they'll benefit from because of people that want to make phone calls, use data, for example. So that's going to help a lot. Obviously, there's the rise in developing countries, the development of the middle class over there. So this company will, really benefit from that. And also with the payment side of this company, the money services, it's growing absolutely huge. And there's a lot of lack of banks over there, and not a lot of payment systems in place. So Artel Africa, with their payments that they have, that's going to grow absolutely huge. I know like even employers are paying salaries through that now. So the payment side of this company as well should do pretty well. It's 53% undervalued on Simple Wall Street. It's currently at 68p. The P is 8, so that's really cheap. Not many kind of investments you can buy in like the telecommunications and the payment kind of industry where it has a P of 8. So that shows how cheap it is. The EPS revenue is going to be pretty good going forward. The balance sheet isn't the best, I'll be honest. The debt to equity is 94%, which isn't great. Obviously, that would be better if it was lower. But it does still have 1 billion in cash, which is a pretty healthy amount to have anyway. So it's not like the worst thing ever, but it's definitely not the best balance sheet I've ever invested in. Now, as far as I'm aware, it's still paying dividend. From what I've seen, the dividend yield is 7.6%, and it's a pretty low payout ratio as well, so that's a pretty good sign there. If it was to cut it, that would be totally fine, but yeah, it's a nice healthy dividend ratio if it carries on doing that. Also, we've got a few insiders actually buying in the company as well, which is a really positive sign. So I'm going to be nibbling a few shares in this one. Not a huge amount because I'm obviously a bit wary with it not being an economy that can manage that well. But yeah, something like but still it's worth a little bit of a nibble for me at these sort of prices. Next up is Card Factory, ticker CARD, which is a pretty cool one. It's obviously a high street, like, gifts, greeting cards. Obviously it sells all them on the high street, and you know what I'm like with the high street, I'm like, I don't want to buy high street companies because I get worried about the footfall dropping. And I also thought, surely Card Factory's like nearly hit the ceiling now. Like, how many more stores can you open to increase that revenue without starting to have stores too close to each other? So I was a little bit wary about this one, but there was actually a little bit of potential in this one as more as I get into it. Now the price itself is massively sold off, which is really attractive. It's just been going down since 2016, and it's now at 43p, which is really cheap compared to what you look at what it was trading at not so long ago. This is one of those where, is it worth just taking a punt and, try and pick that bottom here? Obviously, I'm going to leave myself some more room in case the stock does go down from here. But still, it's just so cheap. I mean, how much longer can this stock go down? And there's a few positives starting to come around this company as well now. So I think it's worth a little bit of a punt, because if you get this right, I see 100% upside easy on this one. According to Simple Wall Street, it's 67% undervalued. It will offer good revenue growth. The profit side is going to struggle, but the revenue has done pretty well. I think the profit might do a lot better than what Simple Wall Street is offering, because of what I'll talk about in a little bit with like the potential of the company. Just to show how cheap this company actually is, it's at a P of 3. Now, if you guys know your P ratios, and I tell you there's a P ratio of 3, you guys know how cheap a stock is that is a company that's at a P of 3. And when we look into the balance sheet, yeah, it's a little bit messy. I'm not going to lie. Like, the balance sheet, money wise, there's 5.5 million in cash, 147 million in debt. So yeah, the balance sheet is slightly messy on this one. It's probably one of the worst kind of balance sheets that I'm invested into after I buy these shares. But I think it's just so cheap that it's probably worth an actual purchase. It did have a little bit of a good dividend. Obviously it's cut that right now, but maybe it will return at some point. The CEO and CFO have bought shares, and that's been in the last 12 months, which is a positive sign. Now the big thing with this is that it is planning to open like some more UK stores, but for me, I was like, there's so much you can do in the UK that you need to go international, and that's what's happened in the last kind of 6 months. What has happened is Card Factory have actually started a partnership with an Australian company, which is called the Reject Store. And after trialling it in these stores and selling Card Factory cards in the store, it's been really successful. The amount of card sales in them stores have gone up, and what they've done is the trial has been marked as a success, and now a lot of Card Factory cards are actually getting put into all of the other stores, which they own. I think about something like 350 stores, somewhere around there. So that's going to do really well that they're kind of getting that Australian coverage now, and obviously that's only going to help revenue and profit. And hopefully from here, what we'll see is now that Card Factory actually look at other international places where they could go to, maybe US. They're obviously a major English-speaking country, New Zealand as well. So hopefully they can set some more international partnerships up. But I think this partnership with the Reject Store will be absolutely huge for them. It's another 350 stores that they've just been opened up to. They've already got like 1,000 now, so that's like increased amount of stores they're basically selling at by a huge amount. So I think that will really help sales this year. And obviously there's the fear that obviously with the shops shutting down, that they're not going to be making any money now. But actually what people don't realise is they've actually started selling cards online, and it's a small sector that has a lot of potential to grow. And since the lockdown, the online sales of Card Factory actually rose 267%, which is a really fantastic number. So hopefully more and more people start to use online. Obviously there'll be better margins online, so maybe they can eventually cut a few of these stores down and kind of move to online and only have a few limited stores. So that's really good from online sales. So I think people are expecting some really bad earnings from Card Factory, but with online sales like that, it will only help the company cover what's happened really with a lot of the shutdown of the coronavirus. So that was a really good positive. And number 3 is Whitbread, and obviously this is a brand that owns Premier Inn, also a couple of other brands like Beefeater. And I know a few of you guys have been asking me to get into this one, so I eventually actually went through the earnings report this weekend, or the weekend just gone. So basically, Whitbread used to own Costa and eventually sold it to Coca-Cola, and that kind of impacted sales, and it's kind of been a little bit negative since all then because of the sales. From the sale of Costa, what's happened is it's actually been able to buy back a few shares. That's able to increase the EPS. It's also built on its cash pile, and it's going to be using this for growth in the UK, and one of the biggest markets it's got potential to grow in, which is Germany. And some of the Germany growth that this company will have is looking really healthy overall. It made an acquisition of the Most Hospitality Group, which had quite a few hotels, and it's also got a few more in the pipeline that it's building, and this will help hopefully make Premier Inn one of the major brands over there. It spent a lot of money on doing a lot of the hotels up they acquired from this company, and obviously when they open up, it'll only help the revenue and profit in Germany grow, and they're trying to be, the major player over there in Germany, and the revenue increase from Germany has been fantastic. And with all these new hotels opening up, obviously there should be a shoot up in the revenue and the earnings. Now obviously this company has been hurt from the close down in CV, but the company actually came out and said, you know what, we might get hurt over the next 2 to 3 months, but you know what, people aren't going to be able to go on holiday, so what they're going to do, they're probably going to be travelling their own country. So in the UK, if you, let's say you're from Manchester, you might go to Wales on holiday, you might stay in a Premier Inn. You might go to Scotland, you might stay in a Premier Inn. You might go down to London, stay in a Premier Inn. So they're saying that because a lot of people are staying in the UK, they're still going to want to go on holiday, and then they might still have people staying in the Premier Inns. So even though there's not international travel, there should be a higher take up with the UK travel. So there's thinking that earnings won't be as bad as what is predicted with this company. And I thought that's actually, that's a pretty true point actually. A lot of people will be wanting to travel, so they're probably still traveling in the UK, and Premier Inn should benefit from some of that anyway. And with that growth in Germany, it should be okay as well. Now the ticker symbol is WTB. It's currently at £25, and this is 2013 prices. So it is, a really sold off stock. So I can see this company, going up a little bit from here. So I'm holding this one somewhere between a 50 to 100% return. It's trading at a PE of 16. The EPS on this one is going to be about a 10% growth. The revenue is going to be about 10% growth because of them because of the Germany acquisitions that they have and the hotels they're building over there. That's where the growth is going to come from. The balance sheet is pretty good because of the Costa Coffee sale. It's got about 502 million in cash, 829 million in debt. The debt to equity is pretty healthy as well. It's got a 22% debt to equity. So the balance sheet is pretty healthy on this one. I would like to see some insiders buying the company, which isn't happening. But overall, I think it's a good opportunity to go buy this stock right now. So guys, there's 3 companies that I have bought this week, and I think there's a good opportunity in these 3 to make 50 to 100% upside in this one. I think that they're not kind of massive long-term holds, these 3, but I definitely think they're a little bit sold off right now, and there's a good chance of over the next 2 years getting a bit of a return off these ones. So I'm not saying these are like longer holds. I just think they're really beating down companies that there's some bit of profit to be made overall. And those are the 3 UK stocks I'm talking about this week, guys. And as always, if you can smash that like button, subscribe if you haven't. I'll see you in the next video.